Hi, everyone. I'm Kalila Reynolds, and welcome to another live edition of Taking Stock. We're bringing you all the latest business news and telling you how it will affect you and your money. Forgive me if I sound a little bit stuffy this evening. Yep, still recovering from flu or something. I think I actually had dengue like a couple weeks ago, so still sounding a little weird, but I am good and ready to go for tonight's exciting show. But first, are you part of the Money Mission community? If not, what are you waiting for? Go to moneymission.mn.co. You can click the link in the description or the comments to join. Also want to remind you to hit that like button and subscribe to this channel. And let me know in the comments where you're joining us from. We've got a great show lined up for you. So here's a look at what's coming up, followed by what's hot in business. And of course, come on, let's get this money.
Student housing developer and operator 138 Student Living Jamaica is seeking to raise funds through an additional public offering APO. The company is offering 195 million shares to the public, priced at $4.40 each. The offer is currently opened. CEO of 138 Student Living Jamaica, Cranston, Ewan, and investment banking manager at GK Capital Management Limited, Dameon Creary, will join us to discuss. And the analysts weigh in on the latest market developments. National Commercial Bank Jamaica has received $9.7 billion in equity capital from its parent company, NCB Financial Group, as it prepares for Basel III next year. Wow! And internationally, the U.S. Federal Reserve signaled it will raise interest rates one more time this year. We'll discuss. But first, here's What's Hot, brought to you by JMMB Group, your best interest at heart. One Great Studio ended its first week of trading up 20%. The company listed and began trading on the junior market last Tuesday. The stock listed at its IPO price of $1 and ended the week at $1.20 with over 52 million shares trading. One Great Studio is the first Jamaican-owned digital marketing agency to list on the JSE and was the first IPO of the year. There's good news for thousands of SSL investors who are no longer in limbo, as some $7 billion in investments and funds at the firm are being unfrozen. According to the Ministry of Finance, as of September 22, SSL began transferring clients' Jamaican dollar securities to other security dealers selected by clients. The ministry said the process could take up to 6 weeks to complete because of the volume of client accounts. It also said that transferring US dollar securities will take longer because it will involve working with US regulators and US investment companies. Meanwhile, Finance Minister Dr. Nigel Clark said that taxpayers' dollars will no longer be needed to pay SSL's operating costs. Clark explained that SSL received an insurance payout of $1 million, which will be used to cover the company's costs. The government had previously announced that it would be temporarily covering SSL's operating costs, such as staff salaries, while the fraud investigation was ongoing. However, the finance minister said an insurance claim was submitted by SSL's temporary manager and the payout is enough to cover the costs. The Venezuelan government last week lashed out at Guyana's latest offshore oil bidding round. Guyana started accepting offers from oil companies for 8 offshore blocks, which could have oil or gas deposits. However, the Venezuelan government says Guyana does not have sovereign rights over the areas, and any oil activity must be done in agreement with Venezuela. Guyana and Venezuela have been locked in a dispute over their borders for decades, and the International Court of Justice is set to hand down judgment on the matter. What's Hot was brought to you by JMMB Group, your best interest at heart.
Hey! Perhaps I could be of some assistance.
This segment of Taking Stock is brought to you by Bulwark Insurance Agency, insurance made easy.
Welcome back. Welcome back. Let's see who is, I nearly said on the line like this is radio. Let's see who's joining us, who are early viewers and where you're from. Kish is checking in from London as usual, and he says another APO on the horizon. We got Shavane from Portmore. Alton is present and early. James Dea. Emmanuel is representing St. James. Chris says there's lots to this discussion. Absolutely. Christine checking in from Kingston 19. Sasheen from St. Thomas. We got Anthony in Portmore. Christopher in Kingston. Who else we have? Dania, straight out of Portmore. Ian all the way in Toronto. Michael in Philadelphia. Orville in Spanish Town. Lamtree from PA. Where exactly is PA? Pennsylvania? I know. Shireen checking in all the way from Bogota, Colombia. We got Grand Cayman in the house. So just to let you know that this is an international show. Atlanta representing, Toronto representing, all over Jamaica and all over the world. Shout out to all our viewers. So 138 Student Living is seeking to raise up to $3.2 billion through an additional public offering. That's if the offer is upsized. So let's take a look at the details. All right, so we'll come back to that. It looks like the recap isn't playing, but just so that you know, 138 Student Living is seeking to raise, that's $3.2 billion. The initial offer, not initial, because I want to confuse it with IPO. The actual offer is about $2 billion, but they could get another billion if the offer is upsized. The share price is $4.40 each. That's for regular folk, ordinary members of the public. But if you are an existing shareholder of 138, you can get those shares at a discounted price of $4.04. So that there's a special rate for existing shareholders. And we want to find out if this investment is right for you. Joining me now are CEO of 138 Student Living Jamaica, Cranston, Ewan, and investment banking manager at GK Capital Management, Dameon Creary. Hi, Cranston. Hi, Dameon.
Hi, good night, Khalila. Good night.
Great to have you. Exciting offer. It's
Thanks
already
very
open,
much.
by the way.
Yes.
It opened earlier in September. And the scheduled close date is when again? Remind us.
It's October 6th.
October 6th. So guys, you have a couple of weeks to study the prospectus, review this interview, and make a decision. So let's start with Dameon. So tell us a bit about the company. What do you do?
So, well, 138 SL is a real estate company listed on the main market of the Jamaica Stock Exchange. It's actually in a niche market in the real estate sector, which is student housing. And 138 primarily caters to students at University of West Indies, as well as students at UTech and around the area. So, all in all, the company is founded on or built on its concession agreement with the University of West Indies. So they're guided by that in their operations. And of course, we'll speak a bit more about the concession agreement.
We have to, because that's a big part of your entire business model. Well, how many units do you have now?
Well, I think these questions are directed to Cranston.
Right, right. So if I may take those questions, Kalila. 138 currently operates 4 halls of residence. We have under 2 concession agreement, that is. So our first concession agreement is the 138 student living agreement. And under that, we operate the Leslie Robinson Hall and the Georgia Lane halls. And under the restoration agreement, which were existing facilities at the university, we operate the Irving Hall, which was restored to high-rise buildings, and the Gerald Layla Flats, sorry. And the Gerald Layla Flats we primarily use for short-term rental. So we're also operating in that space. So overall, right now we operate over 1,400 rooms, and we have the capacity to build out another 842 rooms here at the University Mona campus.
Okay, so what is the demand like right now for rooms? Because we know COVID severely impacted
Yes.
what is going on student housing because nobody was on campus. Has that
Right.
fully recovered now?
Right. It's a very interesting question you asked, Kalila. And yes, COVID-19 was a very trying time for us. We managed to quickly pivot our business into other areas of revenue generation. Particularly one of those is a short-term rental, which we operated in already, but we had to, find other solutions and deepen our footprints there. And part of our projection coming out of COVID is that actually we thought that we would have, take maybe about 2025 to recover. But in the first year after COVID-19, we saw our occupancy peaking at 93%. Can you imagine that? So
Wow.
yes, and so the new academic year just started. We have seen exceptional demand, and right now already we're in the very high 90s in terms of our occupancy. So you can understand there is huge demand for our product right
The
now.
high
Exceptional
90s.
demand.
Is that the best
Yes,
that you've had?
yes, and there are many who could not get accommodation this year. So
Oh.
you can understand there is excess demand.
Oh, wow. Okay. All right. So that means we don't have to pay you right now because they don't have.
We're happy for that and happy for them also.
I'm sure they're happy for that too.
Yes, yes.
But in the prospectus, you did note that, and forgive me, guys, because I did mix up the two of you earlier. I did mean to address
Sorry.
that first question to Cranston. But in the
Yes.
prospectus, you did note that your business model is not diversified because all of the units are at Mona. So,
Correct.
for example, if there's like a hurricane or an earthquake and all of your units are affected, you're pretty much screwed. Do you have plans to build residence at other campuses, say in different countries?
Right. Yes, that definitely is our plan. Suffice to say, we do carry adequate insurance coverage and to manage that aspect of our risk. But yes, part of our plans is to look at diversification. Our model is one that is easily replicatable, and we are seeing demand, from even nearby university, the University of Technology, that we house a number of their students on our halls right now, and we see other areas of demand around the country. There are other universities, and of course, the region is there. There are opportunities for us to tap into, in the nearby Caribbean islands where we're not yet playing in, and of course internationally. And I want to say also, Kalila, that even though we are in the student housing space, our model can be adapted to other type of housing facilities. And so we're looking at some of those opportunities even as we speak.
Tell me more.
Well, there are some that I cannot disclose right now because they are pretty much at the early stage, and as such I cannot fully disclose. But there are some opportunities we're looking at even with the government of Jamaica, which is outside of the student
Oh.
housing space.
Which brings me to another question. But first, our recap of the offer is now playing. We had some technical difficulties earlier. So let's go to that look at the offer.
138 Student Living is looking to raise over $2 billion through an additional public offer. The company is offering 513 new million shares for sale, with an option to upsize by 256 million shares. Existing 138 shareholders, employees, and key partners can purchase new shares for $4.05, while new investors can purchase shares for $4.40. The minimum amount of shares you can purchase is 1,000, followed by increments of 100. The offer opened on September 8 and is scheduled to close on October 6. GK Capital is the lead broker.
Okay, did it freeze? I'm not sure if it froze or if that was my internet giving trouble, but hopefully you're able to see some more about the offer. So coming back to you, Cranston, just
Yes.
confirm that you're hearing me. Okay, good.
I'm hearing you, Kalila, of
My
course.
internet is on. Did it freeze for you just now?
No, it didn't.
Oh, okay. So
quite
something's
clearly.
going on with my internet. All right. So you did mention, or we have been talking about the concession agreement, which I almost want to say 138 is famous for. When I think of 138, that's one of the things that
Yes.
comes to mind. Like, it's a business model that basically you can't lose. You have a minimum 30-year deal with UE that guarantees you 90% occupancy, and that basically saved you during COVID. But because that's such an essential part of your business model, how ironclad is that deal? Like, has there been any attempt by UE to renegotiate, especially given what happened during COVID?
Right. So there has been no renegotiations based on COVID, at least not at this point in time. Remember, Kalila, now we operate two different concession agreements. One that covers the Georgia Lane Hall and the Leslie Robinson Hall, and another that covers the Irving Hall and the Geraldine Flats. Now, what I will say to you is that we did have a heads of agreement earlier last year with the university, where the concession agreement that governs the Irving Hall and the Leslie Robinson, and in particularly the Irving Hall, we had an amendment on the agreed return on investment, where prior to that it was at 15% and we renegotiated to 9%. And there are some negotiations that we engage the university in, and we consider on our side a win and on the university side a win, and for all stakeholders. So yes, but outside of that, I would think that we have a very sound concession agreement. It's the bedrock on which investors invested in the business, and it's one that we hold very dearly. Yes.
I noticed too that you ventured out into short-term rentals as well. So we
Yes.
know you primarily for student housing, but you're now doing some Airbnbs. How many of the units are reserved for that?
Right. So Kalila, we actually don't really do Airbnbs. We consider our short-term rental, a lot of which is aligned to groups. So there are groups from the university which come here. They could be professors, it could be overseas students doing research programs. It could be doctors or persons aligned to the university hospital, or even patients. And then there are also sporting groups which patronize us a lot. Over the years, we have hosted a number of schools in the Boys and Girls Championship and other sporting groups. We recently hosted also the recent netball championships that were here, and rugby championships. So that is where our short-term rental market is pitched. We really don't do a lot in the Airbnb space.
Ah, okay, because
Yes.
there is a perception. I was speaking to some students and they were
Yes.
telling me 138 has Airbnb. And I was like, really? And I looked in the prospectus, I did see short-term rentals. So it's a specific group of people. It's not listed
Right.
on Airbnb.
No, we are listed on Airbnb.
Oh, you are? So
But-
tell me you're not listed, you do Airbnb.
No, we are listed, but I will say to you that our business is not around that. Because if you were to look at what we get from Airbnb on any annual basis, I don't think we get more than 20 persons or so. Because it's not one of our focus. Our focus is on groups. And most Airbnb, they're really short, one night, 2 night, or 3 night stays. And so our model for short-term rental is not positioned in that way.
Oh, okay. But I was wondering about the safety of that. So you have a community
That's correct.
that primarily houses students, but then you
Yes.
also give access to anybody who wants to come in and rent a unit.
And that's why I wanted to correct that we are not a big player in the Airbnb space. We're very small. And anyone who comes to us through Airbnb space is appropriately scrutinized. And recall, we're a 24-hour gated community also. So we have some type of restriction. So as I said, our big space is in the groups, group bookings and bookings aligned to the university and so on.
Okay. All right. Let me bring Dameon back in. Let's talk about the use of proceeds for this offer. A big part of the proceeds will be used to reduce debt from $3.5 billion to $2 billion. Explain the impact that this will have on the company.
So, of course, the main impact is that it would unlock some cash flows, which would allow the company to pay dividends, which is the primary purpose of this APO, to derive value from the balance sheet and distribute that to shareholders in the way of dividends. So in terms of numbers, it should free up approximately or over 250 million in terms of principal payments and interest payments. And of course, it would also impact the income statement. So you should expect a larger net profit should the offer be successful.
Per year, it's going to free up 250 million over what period of time?
So it has stages because of course you have different debt maturities and different debt profiles. But for the 2024 financial year, that 250 million figure is actually accurate. So slightly above that 250 million in terms of the minimum raise. Of course, in the maximum raise, it would free up a bit more cash for the company.
You know, there are a lot of people, every time I do these interviews and we look at these prospectuses and you see use of proceeds, pay off debt, I get people in the comments who are skeptical about raising funds to pay off debt. So why do an APO to pay debt? Because you have people who think that APO shouldn't be used for that, IPO shouldn't be used for that. You should use it to invest in the company.
Kalila, let me take that one maybe. If I may take that one. Kalila, 138, and I just want to put it in perspective. 138, when all these towers were built, was built with a lot of debt. And so on our books right now, we have in excess of $4 billion worth of debt. And so what happens is that a significant portion of our cash flows goes towards servicing debt and paying interest payments. What we're trying to do here is to deleverage a company and to say to our shareholders and our prospective shareholders that come on us with this journey or continue on us with this journey. Part of our intention is to return a significant portion of the earnings from this company in the form of dividends to our shareholders. And we would have signaled that also because in February of this year we had our first dividend. In February we had our first dividend payments to our shareholders. And so what we're saying is that being tied to the banks in a high interest rate regime, as it were, and luckily for us, during the COVID period of time, we renegotiated some of our debts with our bankers, and so we were able to move from what was primarily a variable rate interest payments to fixed rate interest payments. So our average interest right now on the debts is somewhere like about 8.5%, which is below the market. So we benefit a lot of that. But looking at the company over the long term and where we want to grow, freeing up ourselves from some of these debt will also enable us to grow the company to the heights where we have it and to make use of the opportunities that we see right now in front of us. So it's kind of twofold. It's deleveraging the company and being able to, pay dividends to our shareholders, and then to look for growth opportunities, to maximize on the growth opportunities that currently exist.
So this brings me to a question from one of our viewers, Shelly-Ann Parkinson. Shelly-Ann says there was IPO money plus other borrowed money plus no dividends. I don't see what they did with all that money. They paid one dividend in 2023 because they knew an APO was coming. Can you respond to that, Cranston?
Right. It's a very good comment and observation, Shelly-Ann. 138 is still a very young company in a growth phase. We're just about 8 years old. A lot of the debt that we raised, as a matter of fact, all the debt that we raised went into the construction phase of the business. And because we were so locked up in debt, it restricted us a lot from paying dividends. And then in say 2019, thereabout, when we begin to turn around the company and begin to record profits on our bottom line, then came COVID-19. And so if you would have noticed and you look at the fundamentals, you would have seen that even in 2020, while we were under COVID-19, because of the strength of the concession agreements that we have, you see that we were still able to record significant profits to our bottom line. Okay, so what we are looking at now is saying to our shareholders, we want to move the company in the positive direction into a sustainable future. And this is the reason why we're back here, with an APO, to look into the leverage a company, free it of its debt burden, and position the company for growth and to be able to honor our obligation to our shareholders.
And as you mentioned, that obligation to shareholders, primary among them is dividend consideration. I saw in the prospectus where you do have plans for more dividends.
Yes.
Tell me what that could possibly look like.
Well, yes, we do have significant plans. Part of our plans is to be able to return, like a dividend yield somewhere in the region of about 8%. And that will be among the best dividend yields in the market. I mean, Dameon, I'm sure, can speak more to that. But definitely what we are looking at is that once we are able to have and generate the cash flows rather than paying interest payments, then of course our intention is to have a very good dividend payment to our shareholders, both existing and prospective. So Dameon, I will invite you to speak on that.
If I could just add to that, so definitely,
Yes.
138 SL is designed to generate cash flows and distribute them to shareholders, as I said. Of course, historically, they would have been paying interest and principal payments to bondholders. So this APO really is just a gateway to achieve the goal of paying dividends to shareholders. It's not complex, it's really simple. So instead of paying bondholders, now the company wants to pay shareholders semi-annually between 8 to 10%. Of course, that's subject to you participating at the 405 or the $4.40 price that we have here for the APO. And I think one point that was probably missed, I think from the previous question, is that this isn't solely for repayment of debt. The company has excess demand that it's trying to meet right now. And of course, if you have excess demand, you have to expand. And that's why you'd see the use of proceeds. I think it's the second one listed that they have plans to expand the room capacity by another 144 rooms, or approximately 10%. And I think that's the Leslie Robinson Hall. Cranston, you can correct me if I'm wrong.
Right. So yes, that's immediate at the Leslie Robinson Hall, and it's a significant component of our fundraise. We do have that construction. It was started a while back, and we postponed it from in the early stage. So the foundation is already laid. And based on the demands that we are seeing, we are thinking now is the right time that we can build out that additional capacity and begin to look to grow the company and for top line growth, which is absolutely necessary also.
Okay, I don't know what's going on with my camera, why it keeps falling for some reason. I'm going to get up and tighten it in a second. So
Yes.
Just before we move on from that dividend point, because I do want to talk more about these other investment opportunities, we have a question from Sean, who says 8% dividend yield based on what price? Dameon, can you take that one?
Yeah, I can. So, of course, there are different metrics because there's a minimum raise and there's a maximum raise. So that 8% would be a combination of the minimum raise and the $4.40 price. And then the 10% would obviously be the other side of the band, which would be the maximum raise and the 405 price. So existing shareholders, 138 SL employees, strategic partners, of course, they would benefit from that 405. But of course, the offer is designed to welcome new shareholders at the $4.40 price.
Now, Kish wants to know, is 138SL not a REIT that should pay out almost 90% of earnings?
It's a very good question that Kish is asking, and the answer to that is simply, to some extent, yes, because our dividend policy suggests that we should be paying 90% of our earnings, and of course, this is something that we intend to achieve over a period of time. So yes, Kish, you are absolutely correct.
But at the same time, Kish, there are no true REITs in Jamaica. We don't have any law that mandates REITs to pay any dividends at all. So REITs are a creature of the United States. We've kind of borrowed the model, but there's no law like there is in the US to say that this has to be the case for a REIT. All right, coming to the use of proceeds, the other use of proceeds. So we have the 1.5 billion for paying down debt. And then we have over 500 million that will be used for other investment opportunities. Tell me about those opportunities. So you mentioned that there is excess demand for housing. So $500 million is a lot of money. Is that specifically what this portion of the funds is going to be used for? Are you going to be starting construction?
Right. So in the real scheme of things, Kalila, and construction where prices are at now, $500 million in terms of one of our high-rise towers is not a lot of money in the real sense, because construction costs are very high, and we are very mindful of that. So what I would say to you is that, and this is why we are looking to upsize to 3.2 billion, somewhere there about, because the additional funds will go towards the additional construction that we have right now of that 144 rooms. That's part of our immediate focus. Okay, the other opportunities later on, we will take them as we see that they are beneficial to our shareholders in terms of what are the potential returns. But our focus right now is on immediately the additional rooms where we have real demand.
So you didn't go into much detail about that in the prospectus. And Shelly-Ann, again, with the tough questions, Shelly-Ann says, can the CEO confirm that after this APO, there will be enough money to build all the new units, pay biannual dividends without having to borrow more money anytime soon?
Right. So we did our analysis, and the simple answer to that is yes, because this is really forward looking, because we assume also that all things will be equal. And of course, God forbid, we don't have anything like another COVID-19. But yes, the business also will continue to generate positive cash flows, into the foreseeable future, that we can, with good sense of purpose, understand. So the answer to that is yes. Based on our forecast, yes.
Daz wants to know, will there be expansion on the UTech campus?
Well, as I would have indicated earlier, Daz, we do host a number of University of Technology students. Each year, the demand from them become more. We cannot speak definitive that there will be construction on the university campus. Those are left to further negotiations and discussions. But what we do know right now is that we see the demand, and we understand the need, and we are carefully assessing our next move in terms of that.
Orville wants to know, what is the estimated cost to construct 100 rooms, cost per unit?
Well, 800 rooms, I can speak right now to 144 rooms, and 144 rooms may take us into about $900 million.
Okay, straightforward answer. I like that. Let me see, what else do we have here? I have a few more comments from the public, but also I want to get into the share price. So Dameon, I checked the share price today, and 138 Student Living ended trading today at $4.32 a share, which is cheaper than the offer price for the public at $4.40. So what was the thinking behind putting the share price at $4.40?
Well, of course, when we had set that price, the market was above that. But nonetheless, our thinking still remains relevant in that at $4.40, you're able to access 530 million shares, or you can apply for up to 530 million shares. However, on the market, I know that you would have seen that the volumes are quite low, and most persons probably wouldn't be able to get the volumes that they're seeking. So the market does not necessarily have price discovery right now, meaning the price that's reflected in the market may not represent the true value of the stock. However, of course, that's why we structured it like this. With having the $4.40 and the 405, it gives investors the opportunity to access large volumes, but also to reduce execution risk. Execution risk meaning most people, they want to buy their stocks over a certain period of time. You don't want to be buying at $4.30 and then the price jumps to $4.40 and then the price jumps to $4.50 because you can't control the price. So buying at $4.40 and locking in that price is actually reducing your risk of actually getting the amount of shares that you want.
So let me ask you, because the offer has been open for a couple of weeks already. What is the demand looking like so far? What's the take up so far?
Well, of course, I can't speak to an exact figure, but the demand is strong. And as you would imagine, for an offer of this size, institutional investors have shown their interest because, of course, they would love to be receiving dividends semi-annually, as would certain investors, whether closer to retirement or people that just require that kind of cash flow yearly.
Okay. Some more questions from the viewers. Sean wants to know, what is the ideal debt amount that you guys want to reach?
Right, I will take that one. Kalila, thanks, Sean. Ideally, I would like to say we would like to slice our debt in somewhere about halfway. Yes, we're carrying 4.1, 4.2 billion, just a little below 4.2 billion now. And if we can get to say $2.5 billion in debt that we are carrying, I believe that is manageable for us and to be able to achieve our objectives.
Okay. Next tough question from Shelly-Ann. Shelly-Ann is on fire this evening. She said the agreement as per the IPO prospectus for the new units had a 4-year deadline. Why was the deadline not met?
I just want to be clear on that question from Shelly-Ann. Are we talking about the deadline to build the units that you're talking about?
Let me see if she can answer quickly. Stop. All right, we have to wait on her to answer that question. So I don't know at this point.
Mm-hmm.
So are you familiar with any 4-year deadline? What was the deadline referring to? She says yes.
Okay. All right. So again, another very good question, Shelly-Ann. So 138 billing out units at the University of the West Indies was a new concept in terms of, and even the price point of the units, of renting the units, is higher than the normal university housing campus, because here the standards are much higher. What you get for your accommodation, everything built into that, all the facilities fully furnished, at a very high standard of living. And so in the early days, there was a slower take-up. Okay, and so we postponed the further build out of the units. What we saw in the advent of 2019 is take-up suddenly increased, and that was when, for the first time, we surpassed the 90% mark in terms of occupancy. We peaked during that period of time at basically 99%. Let's call it 100%. And that was very good. And from there on, we continued to grow in terms of demand. because what we find is that, university students these days, they're very discerning. They want good quality accommodation, and so we find that the demand has just been blown away over the last few years. And then you had COVID, and then coming back out of COVID, as I would have indicated, we immediately returned to an above 90% occupancy, which even us here at 138, we were not expecting to return to a 90% occupancy so quickly. So, it's part of the cycle of the business that you put a new business out there. It takes some time to take traction, and now we are in a phase of growth and sustainability.
All right, so before we wrap up, let's take some technical questions. How do people apply for this APO? Dameon?
Yes, so there are 3 avenues that investors can apply to. The first one is our website, gk1wealth.com. We also have 2 selling agents at this time, JM Fund Managers, so their platform is JM Blue. And of course, for the JMB clients, you're probably familiar with Moneyline. So 3 avenues that investors can apply.
Philip wants to know, does buying tomorrow qualify one as an existing shareholder?
No, so you would have had to be a shareholder as at September 6th.
So before the APO opened?
Yeah, right before. So it opened on the 8th.
Yeah, remember guys, it's already open and it's scheduled to close on October, what was it, 9th, you said?
6th, which is
October
next week, Friday.
Next week, Friday. Michael wants to know, when will dividends pay out? Any idea?
Well, that's a good question. If I may take that. Of course, for dividends is something that normally we look at the board level. While I do not want to preempt what my board will decide, I am anticipating and suspecting that we paid a dividend in February of this year, and it is likely to see that the next trend could be next February. But I say that with the fact that these are discussions that happens in the boardroom. And
Okay.
of course, shareholders will be appropriately advised.
All right. And finally, I did notice that there are no financial projections in the prospectus. So what can we expect from 138 in the next 1 to 5 years?
Well, what we can expect, and I mean, I will say this on the basis that we have this successful raise and our investors, the shareholders, continue to support the business, for which we are very thankful of. But we do anticipate that we will see some growth in our top line revenue. And one of the things is that, Kalila, is that we have been astutely managing this business in a very tight fiscal way, because we recognize that this type of business, you have to have good, you have to be very efficient. And I think a lot of that has helped us along the way, and it is one of the intentions that we intend to continue in this vein. And of course, if we are successful with this raise, we will see, as Dameon would have indicated, some maybe about another 200 or so million or more million being added to our bottom line. So of course, the intention is to grow our top line revenue and our bottom line profitability in a very sustained way, and to continue to manage this business, for our shareholders and all our stakeholders that are involved.
And
all right.
Can I just add a disclaimer? So the dividends I would have mentioned are the forecasted dividend yields, 8 to 10%. Of course, that was based on the company's forecast, but you guys can always do your own math. You can be guided by the prospectus in terms of the expected interest savings or interest cost savings, and just work your way down to the net profit, and then calculate it from there on and forecast.
So I'm seeing in the comments that there is some contradicting info. Some other interview was done and there was something else said, but I'm not getting the details as to what was said. I think it refers to I think it was Philip's question about, let me see if I can find it back. Philip's question was about if you buy tomorrow, if you'll be an existing shareholder. Apparently something else was said in a different interview regarding that.
I'm not aware of that, but Philip, you can
Right,
reach out to
right.
me.
I would like to clarify that I am aware, but while I don't have the answer to that question, I believe that it is something, Damien, that we can research and we can, just put it out there to be clear to our prospective shareholders. But I'm aware that yes, that was said in a previous interview. But I'm not so sure about it, so I would not be able to definitely answer whether or not one could buy now and then be a part of the key investor pool, or whether or not you would have had to be an investor before September 6th. So it's something that we need to clarify for
Okay.
our yes.
Yeah, that sounds to me like it was probably a mistake. Because how
Yes.
could you have an APO and then you can buy after the APO and be an existing shareholder? I don't see how that would possibly work. So
Yeah,
look into that, please, and let us
yeah, and
know.
you should be guided by the prospectus as well. So it's
Yes.
stated in the prospectus.
What does the prospectus say?
I'm certain that it says September 6th.
Okay.
Yeah.
All right. Well, the prospectus would be the final word because that is what is published, and those are the rules guiding this offer.
That's correct.
You would have had to be a shareholder before September 6th. I'm going to take a quick look during the break as well and just confirm that that's what it says. But thank you so much, Cranston and Dameon. All the best with this offer. And we look forward to hearing the results. Guys, the link is in the description if you want to read the prospectus for yourself and apply for this APO. Thanks, guys.
All right. Thank you, Kelly.
Thank you very much, Kalila, and thank you very much for your listeners out there. And we truly appreciate the opportunity to be on your program.
Okay, and it's now time for tonight's poll question. And obviously, our question is, are you interested in 138 Student Living's APO? Here are your options. Yes, I'm definitely going to take part, maybe because of those dividends. No, I won't be purchasing. C, not sure yet. I'll decide later. You have about a week and a half left to decide. Or other, leave a comment. You can take this poll on Twitter or on the community tab of my YouTube channel, and also leave your comments in the chat. I'll take a look after we come back from the break. But before we go to that break, last night inside the Money Mission, I hosted Ask Kalila How to Get Ish Done. I gave my top 10 productivity hacks, and here's a short clip. Number one, take care of yourself. People want to know how you get stuff done. You have those who believe in the sleepless nights and that sleep is for suckers. And I think I saw Steve Harvey saying he only sleeps like 4 hours a night. I completely disagree with that approach. I believe that you need to take care of yourself first and foremost before anything else. Those messages in the airplane when they said, put on your oxygen mask before you can help anyone else. You have to nourish yourself in order to be your most productive. A rested mind is, to me, the most productive mind, an energized mind, a mind that can think of things that you might not have thought of before, things that a tired mind won't be able to think of. So get your full 8 hours sleep. Absolutely. And I find as well that sleeping on things helps you to wake up with clarity. So when you are able to get a good night's sleep, if you went to sleep, something bothering you, many times you wake up and all of a sudden there's clarity. That's one of the reasons sleep is important. Also making sure that you get. Well, the replay is now available inside the Money Mission community with either a basic or premium membership. And in fact, I'm giving away the cheat sheet tonight for free. So that was tip number 1 of 10 tips. And I feel like that was one of the most important ones. Make sure you get your rest, take care of your mind, body, soul. That's the only way you can be productive. But I'm giving away that same document that I read from tonight for free. And you can check the description box on this video for the download link. I've also added our calendar of events for the next 6 months so you can know exactly what's coming up in the Money Mission. In October, we've got a basic accounting webinar coming up on the 2nd, our official in-person launch on the 9th, And the next edition of Ask Mike with Michael Lee Chin on either the 30th or the 31st. And you can check the link in the description as well to download our calendar. Now, I want to remind you guys to hit up the like button, as somebody mentioned. Where you go? Spartan says 200 people watching and less than 10% like the video. Come on, people. We can do better than that. Like the video. Up next, we've got your market recap, and the analysts are standing by.
This segment of Taking Stock was brought to you by Bulwark Insurance Agency, Insurance Made Easy.
Hey, moneymakers, join the KRM fam with our official merch. Get it now at KalilaReynolds.com. Let's get this money.
The JC Combined Index lost over 2,000 points or less than 1% last week. 122 stocks traded across the main and junior markets for the week, ending Friday, September 22, 2023. 43 made gains, 65 lost value, and 14 stayed the same. 103 million shares changed hands on the Jamaican dollar market, valued at $432 million. Newly listed One Great Studio was last week's most traded stock. It took up 50% of market volume with 52 million shares trading. The stock gained 20 cents on its listing price to open Monday at $1.20. The stock was also the week's second biggest gainer. Wigton traded at the second highest. The stock lost 2 cents to open this week at 68 cents. And the Trans-Jamaican Highway rounded out last week's most traded with 5 million shares changing hands. The stock lost 9 cents to open Monday at $2.54. Now let's see who had the biggest gains for the week. CAC 2000 was the market's biggest gainer. The stock climbed 27% to open Monday at $4.46, and General Accident Insurance was up 14% to open the week at $5.20. On the losing side now, First Rock Real Estate Investments USD was the week's biggest loser. The stock lost 2 cents to open Monday at 5 cents US. ISP Finance Services was the week's second biggest loser, opening the new week at $35. And Epley 7.5% preference shares due 2024 was down 18%, closing last week at $5.56. Over on the Trinidad and Tobago Stock Exchange, the composite index was mostly stable last week. National Enterprises was the most traded stock. The stock lost 10 cents to open this week at $3.55 TT. Guardian Media was the biggest gain of the week. The stock was up 10% to start the week at $2.20 TT. And on the losing side, One Caribbean Media fell 4% to open Monday at $3.56 TT. Over in the US, the Dow Jones lost almost 2% last week, while the S&P 500 and the Nasdaq both dipped about 3%. At the pumps, the price of 87 gas rose $2.57 last week, while 90 was up $2.68. Meanwhile, regular diesel prices rose $4.50 and low sulfur diesel was up $4.30. In foreign exchange, it took an average $155.42 Jamaican to purchase $1 last Friday. That's 18 cents less than a week before. Meanwhile, it took an average $115.99 Jamaican to purchase $1 Canadian dollar. 1 British pound cost on average $190.43 Jamaican, and you could buy €1 for $167.43 Jamaican on average. Finally, on the crypto markets, Bitcoin prices fell almost 4% over the past 5 days, trading at $26,126 US on Monday, while Ethereum was down almost 3%, trading at $1,578 US on Monday. This segment of Taking Stock, The Analyst, is brought to you by Profit Jumpstarter. Disclaimer: this is not intended as financial advice. Please consult a licensed financial advisor before making investment decisions.
Welcome back. Welcome back. Now, before I introduce our analyst panel, let me pull up the prospectus. So here we go. We want to take a look at that question and clarify the issue of who would be qualified as existing shareholders. And this is what it says here in the prospectus under definitions. It says existing shareholders, the registered holders of the existing ordinary shares of the company as at the opening date. And the opening date was September, was it the 6th or the 9th? Either way, it's already gone. So if you buy today, you would be a new shareholder, not an existing shareholder. You would have had to be an existing shareholder before the opening date of this APO. So perhaps some other info was given previously, but the prospectus is the final word and the authority on that arrangement. So just check the prospectus to see. All right, time now for the analysts. I'm joined by business writer at the Jamaica Observer, David Rose, and CEO of Profit Jumpstarter, Keisha Bailey. Welcome back, David and Keisha.
Hi.
Okay, let's start with you this evening, David. NCB is back in the news. They've just received almost $10 billion in equity capital from its parent company, NCB Financial Group. Why did the parent company give NCBJ nearly $10 billion? Like, what's going on? Please explain that to us.
So, Basel III is this magical thing we keep hearing about. So, people are wondering, why does it matter? So, in the case of NCBJ, they are going to, have to look at the reality of Basel III requiring a higher regulatory capital minimum, which in turn means that they'd have to raise the regulatory capital. So, in the case of how you calculate regulatory capital, it is your share capital, your retained earnings reserve, and your statutory reserve. Add those three up, you get regulatory capital. Then you have the risk-weighted assets. That's just a simple thing to calculate. That's to be told to you by the company. Once you buy the regulatory capital by the actual risk sets, what you get is your capital adequacy. So under Basel III, basically that 10% is likely going to change to 12.5% or even higher. So as a result, NCBJ has to, increase its capital adequacy to ensure that it's not too close to the minimum that will be applicable under Basel III. So at the end of March, we're 13.29%, and with this recent injection from its parent company, they're pushed up now to around 15% in terms of capital adequacy. First, you're going to say, well, that's not much, but the fact that so much money when you're using a 1% jump kind of shows you how much or how large NCB really is for this context. And to be honest, NCBJ's capital injection kind of tells me, say, hey, this might be a reason for the APO. Because where would NCB Financial Group, the parent company, get that money in the first place to give NCBJ? Remember, they're a holding company. Or the management fees they get from NCBJ and the dividend income they get from NCBJ, Guardian, or other subsidiaries, they literally don't earn any other form of income, potential investment securities. So it's likely that, NCB Financial would have to take an additional debt recently to give NCBJ that actual, capital injection. Because over the last year, well, between September 2021 and September 2022, NCBFG's cash went down from $15.8 billion to $280.63 million. And that's quite a steep drop. So on the NCBFG side, there's something called double leverage ratio, and best practice and standard is that shouldn't pass 120%. What that means is the equity of the holding company divided by the equity of the subsidiaries divided by the equity in the parent company should not pass 120%. If it does pass 120%, then you have a problem. And that's where the BOJ would say, hey, you have to adjust this or deal with it.
So do you have an idea what this would make that ratio?
That's just it. I don't know, because at the end of December 2022, it was at 120%.
Oh. That's if indeed. So we're assuming that it's debt based on what you explained, but they would have to disclose this in their next financial statements anyway, right? So we soon find out.
Well, the quarterly reports, the disclosures are not as appropriate. But if you're reading the audited numbers which come out in December, then you're going to actually see these details in the notes. So, go ahead, Kalila.
No, I'm listening. I'm listening very keenly.
So what people need to remember is that if NCBJ takes on, in this case, equity capital, what it does is that it increases the equity of the holding company, and that in turn reduces the double leverage ratio and brings it down. Because remember, the devil is taking $10 billion given to NCBJ. So that means that NCBJ, which is its equity would go up, while equity in the holding company had remained the same. So by doing an APO, they could reduce the debt, and on top of that, increase the equity in the holding company, which in turn brings them down on the double leverage ratio. And this is just to show people that why they're saying NCB Financial Group made $40 million net profit last year and this and that. The reality is, if you don't try flowing through the holding companies, you're going to get lost by looking at the consolidated numbers. Let me explain it again. NCB Financial Group's consolidated numbers shows the economic activity of all the businesses in the NCB Financial Group minus any intercompany transactions. So when you see here $40 billion, that's representing all the activities that would have happened within the group. The $28 billion in net profit attributable to shareholders represents what is attributable to NCBFG shareholders in particular. And although you're seeing such a large figure, not all of that income can actually flow up to the parent company. So remember, NCB Financial Group has 4 key subsidiaries. NCBJ, the Jamaican bank, as a wholly owned subsidiary. Clarion Group, which they own 50.1% of. They own 61.77% of Guardian Holdings and 100% of TFOB Limited, which is basically Link. When you actually check it out and look at the company financials for NCBFG, keyword company, not the consolidated numbers, you see where dividend income had a significant drop, during 2022. So in 2021, they got $14.97 billion in dividend income, and that all came from NCBJ. In 2022, they only got $1.23 billion in dividend income. So you can see if the dividend income from subsidiaries are going up, how can you pay dividends to shareholders? And this is just, showing, I'm giving a very simplistic overlay of how cash is moving through the financial group. And a major issue that people don't seem to realize is that while Garden is a great business, their dividend is being paid in the wrong currency. What do I mean by that?
The TT
So,
dollars?
yeah, that's a big issue. Because NCBFG doesn't directly own the Guardian shares immediately. They have an intermediary subsidiary called NCB Global Holdings Limited, which is based in Trinidad and Tobago. And whatever NCB Global Holdings gets, they then remit to the parent company once it can actually, be paid out as dividend income to come to the Jamaican bank account.
And I just saw an article out of Trinidad saying that one of their major banks, I don't remember which one,
Republic.
They're now reducing the amount that you can spend on your credit card in US dollars. Like they cut it in half.
From 10 grand to 55,000 US.
Yeah, exactly. So that just goes to show the issues that Trinidad has with that foreign exchange issue, which is playing out in this whole NCB saga as well.
Because the funny thing is,
go ahead.
So even PriceSmart, the one that sells on Import More on Redhills Road, they had $1 million worth of US dollar worth of expenses associated just to get USD out of Trinidad and Tobago, and that just for the quarter that ended recently. They spent more than $3 million US alone getting money out of Trinidad for the last 9 months.
Wow.
How did they achieve that? They bought euros and Canadian dollars and then sold them in to get US dollars. And what they'd also done is, export the goods to other countries or other member territories, for example, Jamaica, and then, take those US dollars, take for their liabilities. Because if you track the cash flow of NCB Financial Group, for one, Clarion Group has paid their dividends to date since they acquired in 2016. TFOB Limited, which is Link, has gotten $2 billion worth of equity to, start operations and grow. Guardian Holdings is paying dividends, but whereas in 2020 they got a 95% of whatever Guardian paid out into their Jamaican dollar bank account, they only got 2% back in 2022. I don't know what it is in 2023.
So coming back to the APO, and sorry, the NCB issue and this $10 billion capital injection from the parent company, this could explain why they're doing an APO at this time. Basically confirms what we've been suspecting on the show for the past several weeks.
Exactly, and the thing is, this is where going on the BOJ, the Bank of Jamaica's website, comes in handy. So they publish the balance sheets of the commercial banks, the merchant banks, and the building societies every quarter. And when you compare the balances for share capital between March and June, that's where you see that difference showing up, for NCBJ. And their parent company is NCB Financial Group. So that's how you understand that NCBFG gave NCBJ, the bank, $10 billion in equity. And you've seen it even with JN Bank. They got $7 billion worth of equity from their parent company, JN Financial Group, in the most recent financial year for them. And JMB Bank got $1 billion from their parent company as well. So you're seeing, the parent companies having to inject more equity capital into the subsidiaries. But at the same time, those parent companies to be careful because they don't want to pass the 120%, in a sense, cap or marker for double leverage ratio. But with respect to the APO, persons are saying, why didn't do a rights issue? Why didn't they take on preference shares, for example? So there are different forms or ways, of how you can issue preference shares. The ones that were most commonly associated with what we know is the cumulative redeemable preference shares. So, for example, JMB Group Limited preference shares, APO preference shares, one preference shares. But the thing about those preference shares is that those are liabilities. Those don't go directly towards equity unless you meet certain conditions. And the thing is, if you're going to say, why didn't the rights issue? The reality is they're going to need to look towards, several potential investors to support the size and quantum of this offer and to go through the mechanisms of, making offer available to other parties and other situations might not be worth the time. So this about APO street and allow persons to buy in is a straightforward and more simpler way for them to get that equity capital, reduce the leverage ratio, and pay down debt as well. So NCBFG, the company, they have about $81 billion worth of debt, in 2022, and about $16 billion was due between last year September and this year September. They refinanced some recently, but there's more debt coming due next year as well, and in the form of bullet payments, meaning if they borrowed $1 billion in 2017, they'd only paid interest payments from then to today, and on the maturity in 2023, they pay all of the principal, this meaning the $1 billion back at one time. And this is just, where sitting down and going through the financial statements in detail of, holding companies, kind of shows you how money flows within financial groups and how dividends can be paid as well.
So before we bring in Keisha, Roswell has a great question here for you, David. She says, Basel III, Basel II credit rating, I understand. Question, how long can companies stand up strong if we should have a deep economic downturn in the future because their dependent is loan, etc.? I get the gist of what she's asking.
To be honest, Kalila, there was a layoff, at a broker last week, and I'm hearing, of other potential layoffs coming in the financial sector in the coming months. So for some persons, they're going to have a very rough Christmas because right now in this very difficult economic environment, people are taking the most judicious decisions of how they should move forward considering all that is going on. So longer this string continues to go on, in a sense, the harder it is going to be, not just for banks, but other financial institutions.
Wow. I can tell you for a fact right now, it is a tough economic environment. Businesses are having a hard time. Many businesses, let me not say all, because they're always the outliers that are able to find a way and take advantage of, whatever is going on. So Keisha, let's bring you in here. Let's look abroad, looking foreign. The U.S. Federal Reserve has signaled that it's going to raise interest rates one more time this year, according to the central bank's projection. But so same kind of discussion we're having, just in a different market. Can the banks manage another interest rate hike once again?
So it's really from the investor perspective. What the Fed Chairman Jerome Powell is saying basically is, look here, inflation is still elevated. And because of that, he will need, through the FOMC committee, they will need to raise interest rates one more time this year. It's coming. The thing is, though, economic growth is still strong. They improved the GDP forecast, meaning then they expect the US economy to continue growing. Unemployment will continue to fall, but inflation is still there. And especially what we're seeing now with gas prices creeping in, and that's a major driver of inflation. We still have elevated levels, and the target for inflation in the US is 2%. We are not near 2%, not likely to be near 2% until probably late 2024 or even later than that. So the news around this upcoming rate hike has sent stocks much lower in the US. September traditionally is a very bad month for stocks in the US, and it's playing into that. And the news from the Fed certainly didn't help in terms of the sentiment around stocks. So they say trouble yard, trouble abroad. It's there.
As America sneeze, we catch cold.
Huh?
As America sneeze, we catch cold.
Right. So the impacts then to Jamaica would be what we want to look at in terms of what's that going to do from an exchange rate perspective? Will that roll into interest rates here going high as well? Because the inflation overseas will flow locally as well. So something to watch for. I don't anticipate we may see the same thing coming in Jamaica, where we're going to get higher interest rates. Don't see that happening. The Fed did mention challenges for banks within the US, but they didn't stress a lot around the nature of the challenges, just that, banks continue to be stressed because we have tight financial conditions in the US. So similar challenges being faced there in terms of banks being under a certain amount of stress. But the main thing as investors we're feeling is that the prices are falling. It can create, buying opportunities for some persons who think more long-term. They'll use this as a buying opportunity. But for others who are in short-term trades, it's definitely very challenging for them.
Yeah, so which brings me to, because we're now talking about a difficult economic environment now, and this to continue and possibly even get worse. Yeah. I want to ask both of you, what should investors be doing with their money now? Starting with you, David.
So, after my end of quarter trade this Friday, I'm just going to be holding cash and looking at opportunities as they come. And, I'm going to be very careful about, what some would say as opportunities, because they might buy a position and it's a falling knife, meaning that as they get in, it continues to go lower. And as you potentially say you're going to average down, it continues to go lower. So right now, in the Jamaican market, I'm more focused on being heavily careful with liquidity, because anytime a position could open up, you don't want to be tied up in other stocks. And when you're trying to exit, you're going to take severe losses, or, your 100% unrealized gain turns into a 20% realized gain just because there's not much buyers, for that particular stock. In the US market, however, up there, it's actually fun. So Keisha highlighted that, we would have seen the declining prices of September. Last year, I was making money, with puts. And, that's just, what I'm looking forward to, in a sense, the expansion of the ways that money can be made on the JSE. Because I could have, shorted a stock. I took my option instead of using puts, as Meta went down, I made money on it. I made my cup again, bought a put, cash came back down, made money on it again. So, right now it's if you're in Jamaica, be very careful with liquidity, and, just ensure that you understand that, hey, if I'm buying a stock, if there's an emergency comes up tomorrow, will I have to exit this position? And if I do have to exit, what potential loss am I looking at if there's not many buyers in the queue? In the US markets, just look and see, where deals might exist, because one thing about US market, it's very dynamic. So you have trends where in a particular period, the prices fall, and as you're seeing potentially a short squeeze or some other event, prices right back pretty fast, and that's your potential chance to make some very good gains.
So David says hold cash. Keisha, what do you say?
From a long-term perspective, the markets will always go back to the fundamentals. And so in times like these, when, stress, worry, panic, fear are becoming the order of the day, usually go back to the fundamentals. Look at those companies that, they stand the test of time. They've been around forever and ever, solid, strong companies, and look for potential opportunities to load up on those. That's my personal philosophy. That's what I've been doing for years, and it works. I'm always just been long-term, and that's what I look at. Not swayed by the noise, but now is the time you look for those companies and take these opportunities to load into them. But load into the right type. You have to look for strong fundamentals. In the short term, there's always opportunity to do what David's saying, put options and so on. The US, other leverage trades on the US. In Jamaica, it's more or less hold some cash and wait to buy. That's really what it would be.
And just to remind you viewers, this is not intended as financial advice. This is the opinion of David and Keisha and what they personally are doing right now.
Right. We never tell you if we're going to do it. We're saying we do it. Right.
Your strategy could differ based on what your goals are. And I'm glad that Keisha pointed out, she takes a long-term view, but you can have, plays for the short term as well. I think we had a question for Keisha. Before we go, Sean says Keisha is the fundamentals queen.
I am. All day, every day.
We had a question for Keisha. Where was it? I think it had to do with, I lost it. It had to do with the dividend thing on the 138 APO. If I can find it back, I'll ask you again. But Keisha, you have something coming up. You have an event coming up, right?
Right, workshop. So, or Build Wealth workshop is going to be on Saturday, October 14th. We're running a sale now. It's 50% off because I want to make sure as many people as possible come and learn, especially with these types of markets, especially with this type of economy. You cannot be caught slipping. You cannot be on the sidelines saying, I wish I knew what to do. There's always a way to make money. My job is to teach you how to do that. And so this workshop is going to be geared towards teaching specific strategies and a lot of details for persons who are serious about building wealth. We're running a sale now, 50% off. So it's only $50 to come.
What?
It's cheap. Very
$50?
cheap. Yeah. We're running a sale.
All day?
Yeah.
You giving food too?
Right.
You can't be giving us food too.
Yes. Refreshments.
You're feeding us too?
Yes.
For $50?
Don't remember to change the price, but yes.
When does the sale end?
Educate. And so some people are saying, I've got a lot of DMs on people saying, Keisha, I really want to come, but back to school was just here. Yeah. And I really just want to be there. So we've created this sale for those persons because you can't say you never get the opportunity to come. Let it not be said that the reason you are not wealthy is because you don't know what to do, because there are more than ample opportunities. I'm making sure that I provide that so you can come and learn and implement.
When does the sale end?
It's going till the end of the week.
Guys, this is an amazing deal.
Right?
Keisha is giving you an entire day face-to-face with her.
And other experts coming in.
Plus, and other experts. Plus, you're giving your food. No, sir. At AC Hotel, lunch alone at AC Hotel is basically $50.
Right.
But you get Keisha and what?
Yes, we have experts coming in on real estate, unit trust, how to build a portfolio with stocks, the whole thing. We're showing you exactly how you create a portfolio for this type of economy to build wealth.
Okay. Well, thank you so much, David. And you want to add something quickly, David?
So somebody asked me a question earlier about Earl Stewart. He asked a question earlier. It was one of the highlighted comments, about not paying a dividend. And the reality is, here's a simple thing to highlight. Paris doesn't consider a dividend at all in all of 2023. And, no dividend, paid by Barita means no dividends paying up to Cranston Financial. And that's just, one example of the reality of financial institutions right now. Not paying a dividend and being very judicious with the future reality and also the present reality means that, no dividends has to be potentially the course of action, because while persons would say, hey, there's always debt markets, it's not attractive to be borrowing at 14, 15%, especially if your return on what you're going to do is not going to be substantially higher to justify that risk. And when persons are asking, about just, the market right now, so you have preference shares, for example, they're selling below par or at par, offering 8, 9%. And I've seen, stocks trade at prices I've seen since started to invest on the JS in 2016. I've bought and I bought at particular prices and sold at a higher price, trade the spreads, but at the same time, I've not been greedy to jump in and just say, hey, a cheap stock, I'm gonna buy in. I'm looking very carefully and it's been realistic. So a person's going into this Friday, which is the last day of the quarter, I would just, be very careful. We shouldn't work to the last 5 minutes. And somebody mentioned in the comments about Trans Jamaica's dividend, and not going to lie, this is one of the best IPOs of the decade.
Trans Jamaica, right? Trust me, that Mandeville Highway, sweet. I know they had a couple of
Short driving,
fence and some cow passing the road and goat passing up and people driving the wrong way. That's gonna be sorted out soon. All I know is 45 minutes Kingston to Mandeville, and I'm loving it. And they're gonna start reaping earning from that leg in January, because they said
$7 million US
free until December. All right, so thank you so much, David and Keisha. Great discussion as usual. Let's take a very quick break and we come back with final comments.
This segment of Taking Stock, The Analyst, was brought to you by Profit Jumpstarter.
I see you waiting for me. You're in my reach, but I have to have a little extra push to get close to you. Are you flirting with me? You want me to come get you, but you won't fall into my lap. You want me to show you that I want you. You want me to be responsible and proactive. Okay, you. I'm coming.
Well, I crack myself up sometimes. Anyway, all right, final comments. Let's see. Who am I? Said Kalila, the markets are in a flux. I have no clue how to play this market. Advice, please. Well, I hope you got some good advice just now. Sorry, not financial advice. I heard you listened to what David and Keisha had to say just now and took those perspectives into consideration, possibly for your own moves. All right. Mr. Brown said, so servicing and debt paying dividends with the APO, he's not interested in this one. Roswell, however, says the APO raise will leverage 138 Student Living to pay down debt and over time keep more of the profits. I believe in the long term they will do well. Javain says, good APO. Daz says he or she, I believe it's a he, says somewhat interested, or they. Christopher says, looking forward to some discussion on Siboney. We didn't get to that tonight, Christopher. Anything new with Siboney? I have to go check what's the latest with Siboney. Who am I? Said, NCB stock depreciation is not making up for the dividend yield, and continues, I'm so not into dividend paying companies. AT&T is a good example. AT&T stock price has fallen so far. You're pretty much stuck with the stock just to collect the dividend. Well, it depends on how much is the dividend. If it's very attractive, then hey. And if the stock is likely to recover as well. Javon says, where's Javon's comment? Buy the dip. NCB is here to stay. APO or no APO, NCB shares are worth buying right now. Look long term. We got William says NCB continues to dilute its share price with the issuance of bond stock conversion. Not good. He again says cash is king in the stock market environment. Hoard cash, my Jamaican people. Sean says the US is a fun house right now. You sound like David. So much volatility, so much opportunity to make money. Jamaica's market is just red all around. Lamtree making a good point. This is why it's important to have a very diverse portfolio. Shelly agreeing, hold cash. And she says, remember, 2 IPOs coming by December. Last week, Marlene Street Forest said at least 1, possibly 2. So we're looking at 1 to 2. And Sean says, anyone that didn't get into TJH at 140 is missing out big time. And remember, you remember TJH IPO that was like just before the pandemic. So it opened just like a couple days or maybe a week or so before the pandemic. And then you had to wait for the listing, which was like weeks after, and whole bloodbath during that time on the stock market. A lot of people who were brand new to investing got so scared because the value went down. It wasn't trading at the 140, it was below the 140. So you actually lost money. But no, the dividend payoff is just sweet if you are a TJH investor. So it does make sense to look at things long term. Things can turn around. Guys, make sure you like the video. All of my like police, where you at? Like the video, subscribe to the channel, and share with a friend. Subscribe to the newsletter at KalilaReynolds.com/newsletter. Our new email subscribers get a copy of my free broker guide. And if you're just tuning in, I also have a gift for you in the description. There's a free download for my productivity hacks PDF from last night's webinar. Ask Kalila how to get ish done. You can also watch the video replay with a subscription to the Money Mission community. Just go to moneymission.mn.co to join. Remember to turn on those post notifications so that you can be the first to see everything. We want to help people learn more about money so we can all get this money together. Follow me on Instagram, Twitter, and TikTok at Kalila Ray. And remember, those are my only accounts. That's my only account. I don't have any backup account. Please report all the fakes, all the frauds, all the scams. If you want to connect with the analysts this week, check the description box for their contact information. Also visit our website, KalilaReynolds.com, for financial information you can use however you like it. Watch, listen, or read. Now tell a friend about taking stock. Investing is the new sexy. So let's make it cool to talk about money. I'm Kalila Reynolds. Thanks for watching.
Let's get this money.